Hello viewers, this is Saurabh Bathwa and welcome to our channel Tax Accountant. So today I like to cover a topic on what has happened throughout the year, like throughout 2025. So a lot of changes have been put through IRD. I won't be covering a lot because there are so many changes. So let's pick up what really impact you, and in quickly 5 to 7 minutes I like to show you what has happened, why you need to know it. Of course, you need to know it. It's important for your cash flow, your year-end planning and things like that. It's also going to help you remain compliance focused. So when you're doing your taxes, you know what you're doing, what's coming up. If you're a property owner, your investors, your individuals, certainly it's going to help you and it's going to impact hugely on your tax planning. So what has happened? Personal income tax rate, as you know, that has been changed. So the new tax rates, these are the new tax rates. So this is 10.5% on 15,600. This is a new tax rate. 17.5% on any income up to $53,500. 30% on income from 53 to 78. So that's 30%, and 33% up to 180. And 39% is tax over 180,000. This is a major change happened this year. Apart from that, we have Kiwi Saver. Big change happened in Kiwi Saver because it used to be $512. That's down to $262. So this is a government contribution. So government when pay you on your Kiwi Saver, that has been half nearly from $500 to $200. And minimum employer and employee contribution, the announcement has been made that this is going to increase from 3% to 3.5% from 1st April 2026. Again, we are only 4 months away from that implementation, and then it will be 4% from 1st April 2028. Things to watch out for, because there are some more changes are being planned as we are lagging behind in terms of our Australian counterparts, where they're sitting in trillions and we are sitting in billions. So there is a big difference between us and them, and there will be upcoming a lot of changes into Kiwi Saver, of course, in next 10 years. So things to watch out for in terms of here. Key update on GST. What has happened in GST? GST, what you need to know is a GST on listed services such as Uber, Airbnb and things like that. So that's in full force now, which came in 1st April 2024. So that has been in full force now. So online marketplaces are to collect 15% GST. So if you're an Uber driver, if you're Airbnb owner, as you know that these changes have been put through to you by them. So, and there is a flat rate credit scheme system where they deduct some percentage and pay you the balance. They try to make it a bit simpler, but if any complexity, you can always reach out to us and we can certainly help you in that. And new process for returned imported goods. So what happens is when you import something from overseas, you have to pay GST. But what happens when you return that goods? Who pays you the GST back? Example, you got something from overseas, of course GST is paid. You bought something from Amazon, you paid GST to them. But what if you don't like the product, you want to return it back? What happens to your GST? How do you get that back? So new process has been put through that how this will come to you, the GST. Key updates into property and investment tax. Very major change for all the property owners that has happened. So what has happened here is from 1st April 2025, 100% deduction of interest as an expense is available to you. So that was not available to you before, as we were dealing with only 80% and prior to that much lower. But now it's back to 100%. So when your tax returns go as of 31st March 2026, which is few months from now, you will be able to claim 100% tax deductions in that. That's a major change happened. Business and tax compliance investment boost scheme, as you might have heard, investment boost scheme has been put through. So this is a 20% deduction is available to you. So people ask, what is this 20% deduction? For example, if you buy something for $5,000, so that 20% of that is $1,000. So that $1,000 deduction is immediately available to you. So you will capitalize the asset of only $4,000 and then you will do the normal depreciation on that. So first $1,000, 20% is available, immediate deduction to you. So that's a major change here. Overseas income and residency employee share scheme. Some changes have been made into employee share scheme, but this is mainly for unlisted companies. The target market of that is all those tech companies where startups and Kiwis who are returning from overseas, let's say mainly USA, when they come here, they should not be get caught under a deferral of employee share scheme payments and things. So some changes have been done there to actually attract them to come to New Zealand and make this their home. So some changes have been done mainly to target them. IRD priorities for 2025, that's what has been, and this is likely to be next year as well. They are really going after crypto and offshore income compliance. So if you have any overseas investments, foreign investments, overseas investments, they are looking for reporting of that. Income versus expense inconsistencies. If you find some issues where your income and expenses are not matching, that's going to be a problem. Cash economy has always been their focus. Rental property reporting accuracy. So recently we've been doing work on some tax audit clients where Brightline tax, they are, even though Brightline has been since 2015, it's been 10 years now, but there are a lot of monitoring issues, compliance issues in that. So IRD is really going hard out on them as well. So we're doing a lot of work in tax advisory and tax audit from that sort of stuff. GST mismatches. So basically when you prepare a tax return, filing GST each month or 2 months or 6 months, and then end of the year financial statements, there's a big mismatch between them. That has been their area, and that's likely to be that area for next year as well. What this means for you, what you need to do, basically forget about the whole what's happening around you, but you just need to look after you. If you look after you, everything will be okay. Review your tax position early. If there is some mistake, something, we review it early, we go and correct it. Update your cash flow plans based on this deductions, availability of interest deductions and things. Update your cash flow plans. Adjust GST according to the new processes what we have. Again, apply all these changes into your financial statements. So action steps would be basically seek advice if you need something early, set up good accounting software, good bookkeeping method. This is what you should be doing it for. Thank you for watching this video. If you want more videos like this, please subscribe to our channel, and look forward to future. Happy and Merry Christmas. Thank you.